Okay, Chapter 10, Consumer Mathematics Financial Management. The diagram below shows the financial management process. Okay, number 1, setting goals. Number 2, evaluating financial status. Number 3, creating out financial plan. Number 4, carrying out financial plan. So X will be reviewing and revising the progress. So answer C. Okay, so number 1, A, A1. Calculate Untitled Raman's cash flow. Explain your answer. So you need to find the cash flow. Okay, so cash flow is equal to total income minus total expenses. So total income will be active income plus passive income. Active income will be your salary, your commission. Passive income will be the rent that you gain, okay, or the share or anything. Then minus the total expenses will be variable expenses plus fixed expenses. Variable expenses will be like grocery, bill, utility, or petrol. Okay, those you cannot estimate how much. Fixed expenses such as house loan, car loan, this one is already fixed by the bank. Okay, so the cash flow will be 5600 minus housing loan, car loan, insurance also under fixed expenses, utility bills, grocery, petrol expenses, telephone bill, okay, minus savings. Okay, 5 rm 5600 minus rm 1100 plus rm 850 plus, or you 5600 minus everything also can. Okay, rm 300 plus rm 400 plus rm 1200 plus rm 500 plus rm 200 plus rm 500. Okay, then you get 550 is positive, so you can write there, explain your answer. Okay, this you can write positive cash flow. If negative, you write negative cash flow, or positive cash flow is also known as surplus. If negative, you call deficit. Okay, after that explain. You say the extra money can save money in case of emergency, or make investment, or invest also can. Okay, now the extra money can do like that. Usually will be like this, the answer. Very simple answer. So number 2. Okay, Encik Rahman plans to buy a house worth 300,000 over a 5-year period with a down payment of 10% of the price of the house. Can Encik Rahman achieve his goal? Okay, so usually less than 1 year is called short-term plan. This one more than want to buy a house in 5 years is called long-term plan. More than 1 year be called more long-term plan. Usually in the textbook is either short-term or long-term. Okay, but sometimes in the question I found it there's a short-term, long-term, and then one is a in between short-term and long-term. I forgot what is it name called. Okay, but the basic one is short-term and long-term. Okay, so if you say want to buy a house in 5 year period, it's not using the 300,000. You must look at down payment. You already can pay down the down payment, that means you own the house. Okay, that is the meaning. So can Encik Rahman achieve his goal? So we need to look here, look the 10%, the down payment, 10% of 300,000. If he can pay per month more than the savings, then he can achieve his goal. So you can write down, usually it will be like this, same method every time. You write down savings for 1 year. Okay, 10% of 300,000. So divide by 5 years. So in 1 year, you know how much you can save, 6,000 per year. If you want to know the month, usually we'll need to know the month because this one everything in 1 month. Okay, so savings for 1 month equals to 6,000 divide 12 months. So 1 month is 500 per month. Okay, so if 500 per month can achieve the savings, okay, that means Encik Rahman can achieve his goal because he is saving 500 monthly. Okay, okay, so we look at B. Shifa works as an assistant lecturer. Okay, her monthly income is 3,500. She earns passive income from the tuition class, 950. Monthly spending budget is monthly spending budget. Okay, her income is 3,500. So plus the passive income. So the total income is this one plus this one. That's total income. Then minus, first minus okay, first you need to minus the saving first, then only minus the fixed expenses, then minus the variable expenses. Okay, so you must remember how much is what is called monthly income, what is called passive income. Okay, monthly income is as active income, 3,500 her income active. Passive will be this one, this extra one, it's called passive. Okay, extra is called passive, or from the house rent that she collected, if there is if none, then minus this plus this one, then you must minus the saving must minus, because there is not including the must set aside the base savings. Then after that, minus the fixed expenses. Fixed expenses will be the insurance premium, car loan, housing loan. And then the variable expenses will be the utility bills, grocery, internet, petrol, telephone, allowances. Okay, they say Shifa dedicates 10% of the total income as a monthly fixed expenses, a fixed deposit to achieve her financial goal. Number one, you are required to create a monthly personal financial plan. So you need to draw a plan. Okay, so draw a plan. So I draw behind so that you can see bigger picture. So B1 monthly personal financial plan from here. Okay, monthly personal financial plan. Okay, so start with income and expenditure. You don't write this one, so never mind, it's not important. This one must write RMI. Okay, so we start with monthly income. Monthly income is 3,500. Then passive income 950. Then the total income add up together 4,450. Then minus the saving 10% of total income. This is the total income, so minus saving 10%. So 10% of this one is 445. Okay, then the income balance, so this one minus this one, you get 4005. Then monthly fixed expenses. Okay, the housing loan, is 1100. Then the car loan AR50. Then the insurance premium 250. Then this one 3 you add up to get the total fixed expenses. Two zero zero, 3 of it. Okay, then start with monthly, just now fixed expenses, now variable expenses. So start with utility bills, uh, 200. Then the groceries 1000. Then the internet service subscription 100. Petrol expenses 300. Telephone bill 100. Then allowances for parents 500. Okay, total variable expenses total will be 2200. So 4005 minus you will get deficit. As either surplus or deficit. Now we got negative, so it's a deficit. Then you draw the table. At first will be difficult, but later on you find it so easy only, because it's just keep on repeating and repeating and repeating. Okay, this one together, total income. Okay, income balance. Okay. Then fixed expenses. Okay, and this part, total fixed expenses. Then variable expenses. One, total variable expenses, then deficit or surplus. Okay. After that, number 2. Okay, this number 1. Number 2, give comment surplus or deficit. Deficit lah. okay, that will be experienced by Shifa based on this financial plan. So the deficit, so you must give the reason, must give comment, because you want to give comment on the deficit or surplus. So if deficit will need to use credit card facility. If surplus, that means you can save it, save for emergency use or invest. Okay, so number two, Mr. Gan works as a teacher and receives salary 4,000. Okay, already written. This is the plan. This is the actual cash flow. That means what he planned, then this will happen. Okay, so from here I can observe that no changes, only expenses reduce, utility also reduce. So sure there will be more surplus. If this is surplus, here will get more surplus. Okay, so Mr. Gan plans to buy a new motorcycle priced at 55,000 in 10 months. He plans to pay lump sum with the savings 10 months. Okay, so we look here. Okay, so from here I can see A. Okay, calculate the balance of income. Okay, this income after deducting all the expenses for both financial plan, this financial plan, and also the actual cash flow. Okay, so this one plus minus everything from the total income, monthly income, you minus everything to get the final one, either surplus or deficit. This one the same, minus. Okay, so when I minus everything from the 4,000, I get 380. Here should be more than 380. So I calculated, I got 480, more by, okay, increased by 100 ringgit. Okay, so this is the A answer for both. Okay, then B, is he in surplus or deficit of income? Give your reason. Okay, can see surplus lah, both also surplus. Okay, so this one surplus because actual cash flow, so surplus. Okay, then your reason will be the surplus money actually he can invest or save in bank. Okay, then look at, okay, so we look at C. Based on Mr. Gan's financial plan, can he achieve his financial goal? Why? Show your calculation. Everything also must show calculation. Whether he asks you to show or not, you still have to show. Okay, to prove that you answer it according to what you learn in this chapter. Okay. So you must write down, okay, what is safe. Okay, if let's say he want to save in 10 months, so he save, this is what he save, 600. So we look at C. Savings in 10 months. Okay, that means 600 times, because 10 months, see whether he can achieve the 5,500 or not. Okay, so you get 6,000. So it's more than 5,500. Okay, so he can achieve his financial goal. Okay, I will show my calculation. Okay, he can achieve. I answer it. Okay, then the D, is Mr. Gan's financial management wise? Justify your answer. Okay, so D, to me is wise. Okay, why? Because he is able to reduce his expenses. Okay, reduce this one expenses and this one expenses. Okay, and then you can also answer, he spends on basic needs, has monthly savings and insurance protection. Okay, he got personal insurance, and then he got monthly savings. Okay, and then he spend only the necessary. He didn't overspend like other traveling or anything. Okay, so we look at E. Okay, identify Mr. Gan's financial goal according to SMART concept. So you must remember what is SMART concept. S, specific; M, measurable; A, attainable; R, realistic; and T, time bound. So you must write down specific, measurable, attainable, realistic, and time bound. Okay, so specific that he wants to buy a motorcycle, 5,500. Okay, buy a new motorcycle at 5,500. Okay, measurable, save 5,500. Okay, attainable. Okay, that means achievable or not. Okay, so can he save 600 monthly. Realistic, save 600 monthly. That is 15%. 15% of his total income. Still okay, not so taxing. 15% only. Okay, not say 30%, 50%. Okay, time bound in 10 months.